Banks are considered to be the safest place to keep money. But do you know that banks make money each time you spend, save, or borrow? There are some unusual practices that banks follow, and you don't understand those because of the complex financial system. As Henry Ford said many decades ago, it is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning. This statement holds true even in the 21st century. We're not saying that the idea of using banks is bad. All we want to tell you are the 5 truths about money that banks don't want you to know. Welcome to Streamline, the video and podcast series brought to you by Line, the financial network that helps active working professionals to save, spend, plan, and protect their finances. And before we start, don't forget to hit the like button and subscribe to our channel. Number 1. Decreasing value of your money. You might think that saving money and depositing it in the bank is the safest option anyone can have. But do you know you are losing your money every single day? Imagine you deposited $10,000 in your savings bank account, and you thought you would withdraw it after 1 year when you want to buy a used car. You go to the bank and take those $10,000, and to your shock, you find out that the prices of used cars have shot up. You need more money to buy that $10,000 car. The increased price is due to inflation. While some of the known banking institutions like Citibank, Bank of America, Wells Fargo, Chase provide savings interest rates starting from just 0.01% to 0.05%. The inflation rate in the US is on the rise and has touched 5%. Say your $10,000 earned 0.05% in interest rates, but the inflation rate sits at 5%. You lost 4.95% on the value of your money. So you are just parking your money in the bank and not making anything over and above it. Instead, you are losing it. Number 2. Banks use your money to do business. Ever thought what happens to the money you deposit in the bank? Does the bank keep it against your name? No, of course not. For the sake of example, you deposit $1,000 in a bank account. The bank will use a fraction of this, say $900, to lend it to people who need a loan or a mortgage. This is called fractional reserve banking. So your money is out there doing business for the bank and making more money for them. You can withdraw your money from the bank anytime you want. But imagine if all of us go to the bank to get our money at the same time. The banks won't be able to give us money. Number 3. Check your account statements regularly. Checking your account statement is not just important to keep a tab on your income and expenses, but it also helps you identify any extra or unknown charges deducted from your balance. If you find any charges that are not yours, you should report it to the bank within a period of 90 days. The banks are obliged to return the money within 2 days. Number 4. Card transaction fees. Each time you use your debit or credit card, banks get to make extra bucks via processing fees. You don't directly pay for it, but the merchant pays the fees to the bank, and this might have already been factored into the price of the product you are purchasing. Let's look at it this way. You purchase a $1,000 product. The merchant pays 3% processing fees to the bank for card transactions, which is $30. The business owners would have added this already to the price of the product you just purchased. Banks also charge foreign transaction fees. If you travel outside the US and purchase something via your debit or credit card, your bank charges a foreign transaction fee. So make sure your bank is upfront with all the charges on credit and debit cards. Number 5. Bankers want to meet targets. Your best friend may miss your birthday or anniversary, but your bank wouldn't ever. Banks always want to make you feel valued. Well, there's nothing wrong with it as long as it is not used in the bank's interest. Remember, all bankers have targets to meet with a timeline. They will always try to sell you their offers, which might sound lucrative to you. You may end up taking a loan which you would have not planned out for. So always be on your guard and read all the terms and conditions even if you agree to sign up for anything. We are at the end of this video, but since you've stayed with us, here's your well-deserved bonus tip. Minimize your credit card debt. According to the Federal Reserve Bank of New York, credit card debt hit a record high of $930 billion for Americans in the final quarter of 2019. Credit cards charge a very high interest rate, anywhere between 15 and 20%. The banks can decide to increase this interest rate even further. In the end, you are only making banks richer. So don't spend without thinking about piling up your debt. Those were the 5 truths about money that banks don't want you to know. Let's do a quick recap. Number 1. Decreasing value of your money. Number 2. Banks use your money to do business. Number 3. Check your account statements regularly. Number 4. Fees on card transactions. Number 5. Bankers want to meet targets. That's all we have in this video. Tell us in the comment section, which of the truths about money surprised you the most? Thanks for watching. Don't forget to like, subscribe, and learn with Streamline.